Hello traders, welcome to this video. Scalping and day trading the futures currency markets. If you haven't already considered currency futures markets, there's never been a better time. At the moment the world is seeing some extreme volatility due to the coronavirus scare, and we're seeing massive volumes on the equities futures markets. And the issue with that for many traders is that the margin requirements have gone through the roof. For an example, if you trade the ES, many brokers now are because of the CME restrictions or requirements, they require a margin of $8,000. Now they do say you do have an intraday margin of 25% of that, but if you choose to trade the Globex session, and even if you consider trading during the New York hours, the volatility is so great, the risk is enormous. And when it comes to the futures currency markets, as you're about to see, even in these volatile times, there's some fantastic trading opportunities which we're going to go through. So I'll briefly explain why you should consider these markets, and even if you've considered them in the past, now is a good time to come back to them. Now you can also trade the forex markets, and there's some advantages there, such as lower margins than what we require on futures. The challenge can be with the forex markets is the spread, of course. You're really paying through the nose effectively with the commissions, the spreads that you really do pay. So you do have other options, but if you're a serious futures trader and you enjoy the low commissions that we pay as futures traders, let's have a look at this market. Now we do have to pull up the risk disclaimer. There is a risk in trading. Don't trade with the rent money. And in these extreme times of volatility, of course, you may wish to be sitting on the sidelines. Sometimes the best action is no action. Okay, just sitting on the sidelines and waiting for the markets to settle down. Now it doesn't really matter when you watch this video, even if the market is quieting down, which we know it will eventually. What I'm about to show you is just as applicable. Now also, if you don't trade the futures market, so if you do trade forex, or if you trade stocks or other futures, some of the strategies and ideas are exactly applicable also. Perhaps that's not quite the right way of saying it, but they're applicable to those markets as well. And as always, these videos are raw, real and unedited, so if I make any stuff ups or fluff up on the way, you'll have to forgive me. Now very quick 30-second advertisement. Well, in a way this isn't even an advertisement. If you don't have one of my free training manuals, please click on the link below and download my training manual free of charge, and also my ebook, The Truth About Day Trading. And even more importantly, make sure you please subscribe to my YouTube channel. Now, as I've got now over 8,000 traders around the world that are members. I've got over 200 that are in my monthly coaching class. I have two-hour live sessions a week where I'm coaching traders on how to trade the markets, and you can purchase my program for only $197. That's it. All of my indicators, there's now over 15-16 setups. There's literally hundreds of handouts. There's now over 300 training videos, not the ones that are available on YouTube. I've got over 200 there, but these are the training ones. Now you don't have to learn them all. As I say to all new members, you start with one strategy and you build from there. My indicators are free, and the only other if I can say upsell or other costs is if you choose to join my coaching. Okay, and that's totally optional, and that's totally up to you. You won't be called by a telemarketer. $197, and it is a gold mine. There's nothing else like it. So end of ad. Let's now get into trading the currency markets. First of all, as I said, a lot of what I talk about is applicable to any market. Every market has its own personality, whether you're trading futures, forex or stocks. So these are some of the considerations that we have. First of all, the account size required, or the account size required by your broker. Now if you're using a smaller stop, or if you've got a really good broker, you may not need a huge amount in your account, but these are serious considerations because you never ever want to risk any more than 2%. and as you build your account and you start trading 5 and 10 contracts over time, you want to drop that down to 1%. Yes, your return on equity will be lower, but it's much easier to trade. Now the next thing is, does the market that we're trading have a good daily trading range? Does it trend well? That's really important, is that every new trader or trader that's struggling with trading, you should only trade with the trend initially. And we've got some brilliant CT trades, counter trend trading methodologies that kick butt every day. However, you start with one strategy and you build from there, and this is one of the mistakes that almost every trader makes. Okay, they're overwhelmed. They're trying to learn too many setups, too many strategies. What you want to really do is focus on one chart, one time frame, and one market to begin with, and only 1 or 2 setups. Now, does it have a good volume? We might have a good trend. For an example, we will also look at the pound, the British pound currency futures. Now it's got a lower trading volume, it's got a great range, but it can be thinly traded, which means if you wanted to trade 10 to 20 contracts at a time, that can be an issue. So that's one thing you do need to consider. What are the best hours to trade? With the currency futures, you can trade around 23 hours a day. Of course, the forex markets are 24, but still very competitive. 23 hours a day, 5 days a week. What are the best chart time frames? Now, with the best chart time frames, it'll vary from market to market. For an example, if you're trading, say, using a Renko chart, you might use a 1 or 2 tick Renko. If you're trading the currency futures, if you're trading the futures market, sorry, the forex markets directly, the cash market, we're going to talk in pips, but because I'm talking futures contracts, I talk in ticks, by the way. Now with some markets, you have to, like the yen, I'd recommend you consider, and even though we've got a lot of volatility all year round, you might have to use a 2 tick Renko, which we're going to look at that very quickly today as well. What are the best strategies to trade? Well, I take a leaf out of Richard Dennis's book, where he says this, that if a strategy doesn't work on one market, he won't trade it. It should work on all markets. However, there are some strategies, for example, when you've got a really good trend following or a good trending market, okay, we want to stick with the trend following strategies, but the strategy should work on all markets. And what are the best targets and stops? Now, there's actually a whole range of exit strategies taking profits that we could use. We can go for previous swing highs, we can use the pivots, we can trail. I recommend, if you're a 1 contract trader, if you start off by trading or going for a fixed target profit, you want to get the cash register ringing. As you develop and build your account, start trading too, then you can consider trailing. But we've got over 16 different trailing strategies. By the way, you only use 1 or 2. You might just use a fixed target and maybe an ATR. You find something that really suits you, and I think that's really important, traders. In the end, it really comes down, it's like, which is the best time frame to trade? It comes down to what suits your personality. And of course, I teach you that, but that's beyond the purpose of today. I'm just going to give you some ideas today. What are the best stops? As you'll see on the charts, I like to place my stop under the closest swing low or above the closest swing high. In a fast moving market, if you've got a runaway market, that can be problematic. Okay, can cause issues. That is, your stop can sometimes be a little too large, but they're considerations that you do need to think about. Now, the other thing here is no doubt I'll also have members watching this because they're on my YouTube channel. So if you're a member, but don't forget, traders, as I say, become a specialist. Right, in other words, with this following chart, and the next couple of charts are on my Google Drive in the folder called cheat sheets. Okay, you'll find them there. This is only one of the pages. There's many different markets to trade. Initially, focus on one market, and probably the market that I'd recommend with the currency futures would be, to start off with, would be the euro, followed by the yen, and maybe then the pound. Now look at this chart. It says 12.50 per tick on both the euro and the yen. That's now been lowered to, sorry about that, excuse me one moment, sorry about that, bit of a coughing. So that's now been lowered, and that has been for some time, 6.25 a tick. So the three markets that I'm interested in are the euro, the yen, and the pound at 6.25 a tick. Now the next thing we are interested is the average volume of these contracts. So on the euro, the average volume is around 200,000, on the yen 160,000, and the pound is 118,000 contracts per day. Now at the moment, with the coronavirus fears, we're seeing much greater than that, up to 3 times the volume in some of these, but that will settle down. However, the attractive part, and by the way, with that, the attractive part is they're still very tradable markets even with these extreme times. But this is one of the great benefits for traders, is that the tick value is lower, meaning that typically if you're trading with, say, an 8 tick stop, and an 8 tick stop, and I'll show you this when we go to the charts in a moment, on a 2 tick Renko is only $50. Now build in your commission, so you've only got a $55 stop, which makes it very, very attractive. So therefore, really you only want to be allowing around you only need to allow around $2,500 to $3,000 per contract you trade. Now this is from the this is a trade station margin, and margins can vary subject to the market volatility, but this is still pretty accurate. So on the pound, around 2,300 US, on the euro 2,300, and the yen is 33. Well, I happen to know at the moment it's actually 3,100. So you can see they're around the $3,000 mark, and you can be trading these contracts. Now when we look at volume overall, this is going back, and so these are the markets on the left that I track and trades a number of these. But if we look at this here, the yen and the euro I'm always interested in. This is going back to last year. We can see there 176,000 on the euro futures contract that day, and 144 on the yen, going to the 13th of the 12th 13th of December 2019. I had there 368 and 215,000. So you can see we've got really good volume, great liquidity, which lowers the slippage, etc. Now if we then look at the moment, 7th of March, where we're really seeing a lot of volatility. We're seeing there on the euro, we've got 419,000. This particular day is a little bit quieter. We've seen bigger volumes than, and 334,000. Now we want to know the volumes also, because that will give us an idea on the size of the range candle or the Renko or the tick chart that we're trading. So these are very important considerations as well. Now talking about our account size, I mentioned here that what's really important here, traders, is the size of our stop, which relates to the account size. So if you've got an 8 to 9 tick stop plus your commission, let's just say that's $60, 2%, you need $3,000. Don't buy in to the story that brokers say, look, you only need $1,000 or $800 to trade, and that's all you need. Because what's 2%, $60? If you've got a $60 stop, you're looking then at about a 7% risk if you're only putting 800 in your account. That's just crazy. You're going to blow your account. So it's very, very important that we manage your risk and your account size. Now the different types of chart types, we've got time, volume, tick, range, and Renko. I love both tick, range, and Renko, and you can use all of these, of course, when you're trading the currency futures. Now if we're trading a 2 tick Renko, and we're going to look at some of these in a moment, and using a buy sell stop, waiting for what I call a T1 confirmation or 3 high closes, we're going to have an 8 tick stop. Now 8 ticks at 625 is $50. So your stop size is fairly good, and a 10 tick target is 62.50, right? But we're going to vary those targets depending on where in the trend we enter the trade. Okay, and I'll give you some examples of that. Now, what I believe is really important, traders, is that you have a goal. You've got a target to aim for. And what is said is that a poor man or woman is not a man or woman without a cent, but a man or woman without a dream. And I really think that this is essential, that you set a target that is large. If you're not achieving $200 a day, I'm going to show you how you can do that if you're willing to put the work in. And as Will says here, set a goal so big you can't achieve it, so you grow into the person you can. You can master the art of day trading, because this is not rocket science. But the challenge is that a lot of traders think that they're committed to trading, but in fact they're only just interested. They're not willing to do the work. And what's really great nowadays is we can use a simulator as long as we like, but there's only one way to master the art of trading, and that's doing it the right way to start with. When your why is big enough, when you've got enough compelling reasons, the how will appear. And I love this statement over here: I can is 100 times more important than IQ. And as you're about to see in a minute, when we get to the charts, this ain't rocket science, but it still comes down to being committed, putting in the hard yards, as far as using a simulator and mastering one setup, and giving yourself 30 to 60 to 90 days to master that one setup. Unfortunately, so many of them want to pick it up and to master it. I've even got traders now would be watching this and I've already hung up and going on to the next thing, okay, because they're looking for what we call the shiny object syndrome. You know what the number one thing in trading is? Practicing the fundamentals every day. Every single day practicing the fundamentals, and a lot of traders aren't willing to do that. Checking the red flag news announcements, going through your chart patterns, checking your daily goals. Traders, winning traders will do the things that losing traders won't do. But anyway, back to this. Let's just say we target $200 a day, and I'll show you how to do this in a moment. What this spreadsheet shows me is that if I've got no more than 2% risk per trade, which is $60, and I'm earning $200 a day, and I'll give you some ideas how to do this. I'll show you in a moment. Okay, you can see here that, and on this spreadsheet, you can only start trading 2 contracts when you double your money. So we're using the market's money. So by end of week 3, we're now up to trading 2 contracts. What this means, traders, is that by week 9 and 10, by about actually the start of week 10, we're now earning $10,000 a week. You see, the attractive part about the currency futures is you've got a lower margin requirements. For an example, if you're trading the ES, you should have in your account $6,000 and to be averaging 200 a day, which means it's going to take you 16 to 17 weeks to get to the same target. Yet you've got the same income opportunity. Now, what if we want to be conservative, and what if your goal's not 200 a day? And by the way, even if you've got 20, 30, 40,000 traders, you start off on the sim and you only ever start with 1 contract. You've got to earn the right to go to 2 contracts. This is the only way. Can you imagine for 10 to 11 weeks you've increased your account over that particular time to 45,000? The confidence and the rules and the discipline muscle that you've built over that time, it's incredible. This is how you really do it. So you start with 1 contract. Once you've earned the right, gone through the simulator, then you go to trading 1. Now, what if you feel that's not for you, or it's too high, or you need to develop the confidence? Well, let's just say you start off by only earning, once we go live with 1 contract, only $100 a day. Let's be really super conservative. It's going to take you there around 23 weeks, 22, 23 weeks to get to that 10,000 a week income, with only $100 a day per contract. My account size is now upwards of $66,000, $70,000. I'm trading there technically, and we'll talk about this in a moment, but around 20 contracts to do that. So I'm earning $2,000 a day with 20 contracts. Now let me say this, traders, when you're getting up there, you're really getting up there on trading these markets with 20 contracts. Okay, when you look at market depth, but yes, there are a few traders that are putting out their 20, 30, 40 contracts, but that's when you may start to consider either go for a larger target per day when you're only trading 10 contracts a day, or that's the time we're going to start considering the ES, the black gold oil, and other markets as well. Or you split your trades between or you start trading a couple of different markets at a time, because here, if you wanted to get up here where you're earning there 50 grand a week, you're trading 100 lots at a time. So okay, so there are some challenges with that on some of the smaller markets, okay, but it's a good problem to have. So how do we actually achieve our 200 plus net per day? Well, we've got two setups called the 2B and the 34B. So members watching this, 2B and 34B every day of the week, and your 2BDs, members, you could even consider sitting those out, just taking your 2Bs and 34Bs, and particularly when you have on your anchor chart a 34B or above, or on your anchor chart 2 a 21B or above, and executing on your entry chart, that will give you the larger moves. So if we consider scalping, we could be down here, and this is before commission, so you're going to take off let's just say there are $30 in commissions. Okay, so you've got around $230 net after commissions. If you pay upwards of $5, you should be under that. But you know, these are scalping trades when we get in, and at times of course we're going to scalp 2 ticks, sometimes 4. It just depends on the conditions, but this is how we get to that. And so we're going to be waiting. If you're using an anchor chart, the anchor charts executing on your entry give you a much larger target to achieve. Now, something to ponder on. I started to mention here, what if you were to target only 100 a day net from 2 markets? Now let me say, with the experienced traders in the room, to do that, traders, you need to be and no matter which market, so if you're going for one market with 200, you want to be targeting 300. You do need to allow for the tough days, for the down days. Okay, so here we'd be going for 150 a day, looking at the end of a week to have averaged $100 a day. Now here, if you're just going for 100, you can just trade the best of the best 2Bs, where you should be up there at an 85% win-loss ratio, just trading, setting aside the 2BDs. That's for the members, just for the listening here. Don't trade the 2BDs, which are lower probability. Just stick with your 2Bs, because you've got this. Now if you go for your 2Bs and 9 ticks, okay, 2 of those trades, there's your commission. You only need 2 trades per day. If you say if you're trading 2 markets, just 2 34 or 21Bs or higher on your anchor charts, and there it is as a minimum. Okay, this is how you do it. And so it's a matter of really, traders, and for those that are new to my channel, is that we want to be trading in the direction of an anchor chart. And this is one of the key mistakes that most traders are making, is that they're not willing to look at the higher time frame. This is the secret to capitalizing on the market. So let's now have a look, and I want to give you a couple of ideas here on the charts. Now first of all, what we're looking at here is the British pound, and we're looking at a 34 tick chart. Now at the moment we're in the what we call the Globex session, the after hours market. Now today, and I'm just going to look over here now, so far today with the pound, it's only traded 7,300 contracts during the overnight session, where with the euro, where is that here, let me with the yen, we've traded sorry, just got a 67,000, and with the euro, so I've got figures bouncing up around the markets, got stuff going all over the place. Where's it gone? Sorry, just There we go, it's 44,000. So that's interesting. The yen, well, of course it is the Asian session, so that's why we got 67,000 contracts, and the euros only traded 44,000, but still some good volume. So this is using a tick chart. So if we look at the tick chart, and let me just change this for you. Yep, okay, so we can go here. We can see now, why aren't you doing that? Let me just got to adjust something here, traders. Here we go, now it will work. All right, so this is a tick chart. When you're scalping or day trading, and you can see these moves here. Now this is probably around red flag and a few other announcements here which you got to watch. You can see there that the tick charts for scalpers can be a little untidy, and this is where then if we go and look at the Renko charts, they become a lot easier to trade. Now there is a secret to trading the Renkos, and one of the secrets is knowing where to count from and where to place your buy stop. So what you can actually do, we have a saying in our business that get ready, get set, go. As soon as we see our first green candle or reversal candle, we get ready and we'll put a buy stop in, and we've got a special way that we calculate where it goes. Okay, now this is a one tick Renko on the pound. Okay, now that right there is what we call a 2B. Here's another 2B, and that's a 2B, and this is a typical ABC. And what you want to be doing, and blind Freddy can see this, that, and there is a losing trade, but there is a nice winning trade. There is a winning trade there. Remember earlier, traders, that I said we want to go for a minimum of 8 ticks, because 5 trades of 8 ticks is going to gross us 250 less commissions. We've hit our 200 plus, and you can see there with all of these we've actually hit our target. Now there is a stop out, and that particular, let me just see if that was a 2B. Let me just see here. Yes, traders, so that is a 2B there as well. So you would have been, and there is another nice winning trade. Now this is the pound. So if you're trading just a couple of contracts, you can easily trade the pound. And let's have a look though. If you want to trade a few more, let's go and have a look at the euro. Now what we're looking at here with the euro, and this is the Globex session as well. Let me whiz down here. Let's just go to the main session, to the New York session. So this is a one tick. Now that time frame from there, where are we here? So this is 10 a.m. and that's a whole 15 minutes. Okay, so you've got plenty of time. Now with any futures or sorry, any forex type market, they can be very susceptible, of course, to anything what we call red flag news announcements. Okay, so you just got to be really cautious here. Let me just turn those little white dots off. Okay, so here though, if we put a a sell stop, my apologies, we would have a sell stop in at that level right there. And that 1 2 3 4 5 6 7, now that only moved down 7 ticks, means we would only walk away with 3 or 4 ticks in that trade, and our stop would go 1 tick above. Now if I was to take this divergence trade that I've got here, a lower low, my stop would be 1 tick below. Okay, and so this is the 1 tick. We had a trade there, there, and there. So easily you've romped your 8 ticks in there. There we had a shorter trade. Okay, and we have a saying in our business, follow the gold. Now these are the areas that you've got to be careful of, and I want you to write this down. Do I have a fanning of the EMA, such as this here? That's a fanning. No, we didn't. But let's go and have a look at now the yen, traders. So what I'm looking at here is a 2 tick Renko, and what I should have said, sorry, just going back to that trade there, that chart there, trading a 1 tick Renko means that you're only going to have, if you put a buy stop in above my 3 candles, you're only going to have a 6 tick stop, which is 37.50. Okay, so if you can trade a lower time frame in the direction of a, let me just expand this one out, I'm only interested in trading in the direction of the trend here. Let me just go over here for a sec. So for an example, this trade right here is this here, okay? And so we're only interested in executing trades on the entry chart in the direction of the trend of the higher time frame. So you actually had a trade there. I can already tell you you definitely had one there and there, because there's actually special trades. I won't go into why, but they're very special trades, and you're going for larger runners with those two trades there. So we're executing here, but when we're executing on these charts, we've got a smaller stop, and that's great because you've only got a stop of $37.50 plus say $5, so you've got a stop there of only $42.50 maximum cost, okay? And yet look at the returns you can get on these. Now when you jump up to a 2-tick Renko, it's looking at the same market with the 2-tick, okay, our stop is jumping up around an extra $12, $13, $14, okay, in that market. Now the yen, let's just go to the yen. There's some great trading during the Globex session. For an example, once again, I want to be trading in the direction of this particular anchor chart, which I've got just right. Let me just pull that out. Is it going to expand for me? There we go. Okay, I want to be trading in the direction. There's a little methodology we use there. We make sure we are trading in the direction of the higher time frame. Now once again, what's our target? Now each one of these step ups, by the way, is worth 1 tick, okay, or 1 pip if you were trading a forex contract. So what we're after ideally is 8-tick moves. Now here, 1 2 3 4 5 6 7. Now we only touch 7, which means I'm only going to be locking in 3. Now this is where you want to learn where to recognize the start of a new trend, and that is down here. Now Gann, who is famous, okay, so if ever you tried to study Gann, it can be really confusing, but the one takeaway I got out of Gann's work was this. As he says, the safest place to look for a new trend is at the end of the first correction in a new swing, meaning you're looking to take the trade. If you want to go for a really large run, a big runner, you trade the first pullback following a breakout in a new trend, okay? And that is, okay, see this trend here? That is right there, okay? These are the ones that will give you, if you want to go with a great runner, these are the ones that will give you the runner. Now on the other hand, you had a 2B there, there, so you had 2Bs all the way. Now remember, you're only after 4 or 5 of these a day, maybe even 3 if you pick up some of these runners. So traders, I've just shown you the potential, and this is, as I mentioned, this is the 2-tick Renko, and this is right here. We're just going back here. Let me just get back to the New York hours. So I just flick here. So what we've got here, this is the New York hours. Now what about these here? Well, in fact, these are just very quick scalp. I'm not interested. Well, it'd be nice to get a much bigger runner, but what I'm looking for is I want to get what I call my 2B trades, which is one just there, and I've also got, there is actually a Gann trade, okay, I've got one there, I've got one there. That was not great, but here is another good one. Okay, now that's one of the Gann trades right there. Now for my members watching this, I want you to remember that most Gann trades will be what we call the T20-1s. okay, so the first trade after a T20 will give you these really good runners. If it's going to be successful, it'll give you these runners. Okay, so your T20-1s will give you those. For those that aren't members, just listening to these codes, these are easy to learn setups. However, you start with one and we build from there. So in conclusion, traders, I've shown you a lot of things here today, but what I really wanted to get across is this ain't rocket science. You master the art of day trading by trading with the trend. And when you're looking at the currency futures markets, particularly in times of volatility, there's still some great trends and they're still very tradable, and the margins are much lower than the equity futures contracts, much lower. Okay, so there's some great opportunities, and when the market does settle down, which it will, we'll get through this, is that once again still consider these markets. And that is when they do slow down, it becomes a lot easier to maybe trade two. Okay, now it means you're going to need a couple of screens, but here where I've got a bank of 6 screens, you don't have to go that far, but you can do it with 2 screens and just look for what we call the 2Bs. So traders, go and request my free books. Better still, become a member of my program, and I look forward to having you as a member. Thank you, traders.